Okay, good afternoon, good morning, good evening, wherever you're coming to us from in the world. This is Brian with NetPicks. Thanks for joining us today, and we are very excited today to have with us Michael Martin, the author of The Inner Voice of Trading. Eliminate the noise and profit from strategies that are right for you. And he'll be interviewed today by Mark Soberman, the founder of NetPicks. And Mark, if you're on the line, I want to say a quick hello.
Yes, thank you, Brian. I am here. Appreciate the quick intro. And we are joined today by the one and only Michael Martin, as Brian said, the inner voice of trading. So, Michael, are you with us?
Sure am.
Excellent.
Thanks for having me today.
Great. So basically what we're going to do, so a lot of you have attended our webinars before. We're going to follow a very similar process. And then I've got a series of questions that I'm going to ask him that that I either learned from the book, reading the book, or things that I was curious about that I wanted him to further discuss. And then we want to end it with some Q&A. So what you can do, as you know, is you can type in your questions at any time. They'll kind of stack up, and then we'll kind of hit a Q&A portion of the presentation to try to make this a little bit interactive. And feel free to ask Michael whatever you want to ask him. And definitely take advantage of this opportunity. The book, The Inner Voice of Trading, is it's a relatively new book that's out there. It's getting great reviews in Amazon, 4.5 stars out of 5. You can't do much better than that. There was a real super review this weekend in Barron's magazine. So I think you're going to learn a lot from Michael, and we'll just try to make it as productive as possible. So I thought it might be a good idea to sort of put up on the screen a bit about your background and bio. Maybe I'll let you do this, kind of just tell us a little bit about who is Michael Martin, and then we'll go from there.
Right. So I started learning about commodities through a work-study program at Columbia. They were, at the time, the third largest landlord in all of Manhattan, besides the Catholic Church and the city proper. And they are big users of natural gas and fuel oil, heating oil. And surprisingly, they did not have a hedging program. So this kind of fascinated me that they could have this type of risk. When you think about it, students and faculty are rent controlled, right? I mean, you sign up, and so utilities are typically included. And that leaves the school gigantically exposed to price spikes. And so back then we were using Lotus 123 and several thousand rows of data from the NYMEX. And I said, wow, this is a zero-sum game. It's pretty interesting that if you're hedging this and it works, you could also use it to spec trade. And so that kind of started my interest in wanting to go to Wall Street, and I did. And then, I hated cold calling. I thought it was a completely banal process. It didn't highlight any of my skill. And so I started making, in-person seminars and presentations to everyone, from, 4 people, families, to, partnering up with an estate attorney or a CPA business manager, and, and being the expert, and concurrently helping the executive get either MCLE for their law license or CPE for their accounting, and also providing an education for free to their clients as a business or a value-added service. And that worked very well because I was much better in person than trying to hawk a New York City triple tax-free, piece of paper paying 6% going out 15 years. What a snooze. So that's how I built my book. I happened to have some good relations in Chinatown, in New York City, on East Broadway, Canal Street, Mott Street. And those folks really liked the risk. It was part of their culture. Google and Amazon and Apple don't move fast enough, so they're doing 200-to-1 leverage in foreign exchange. And so with those folks in hand, as a commission broker at a time when round turn commissions were $125 per round turn overnight. Day trades were anywhere between 75 and 90. Which were still, now they're 90% below that. But anyway, I figured if I took the profitability and took a 20% incentive fee, that I would make gigantically much more money on my own. I did. I continued speaking. I started writing to have people call me, with inbound phone calls and solicitations, just kind of like as everyone was getting email. And that worked out pretty well. And then, as you can see, I've leveraged that going forward with, blogging and teaching in the various places. Teach at UCLA, at the CFA Institute, mostly through NISA, where I was Friday, and the blogging at Huffington Post, Business Insider. I've been printed at Barry Ritholtz, The Big Picture. I've been both published and quoted in Barron's, New York Times. And, anyone can get there. You just have to persist. And I've just been very lucky, so hence my teaching. I just feel I have to pay it forward. I've been really lucky for some reason that a lot of these really great traders have taken me under their wing. And, it's very beneficial to me. And so I try to share that both in the book and in person. And, running money now, work for a big outfit. You got over $3 billion in assets. I trade mostly spreads and seasonals, but because of compliance, I can't really get into the Johnny Magori of it because it's marketing, and then I would have to have everything such as what I want to speak about today go through compliance. And as you can imagine, I'm a very independent guy, and I don't like to have to answer to any type of authoritarian wisdom. So I am trading, I am managing risk. And that's it. I live in Los Angeles. The weather is good. I'm a New Yorker, if you haven't figured that out yet from my accent. And that's it.
Great. Sounds good, Michael. One thing that you mentioned there, you were talking a bit about early on when you were building your book, and you were dealing with people who obviously had a very large, high appetite for risk. And something you mentioned frequently in the book, I think, is how important it is to find a system and really markets that are compatible with the individual trader. That it's really not enough to just understand the system from a technical standpoint. Why do you feel there are wrong markets for people and right ones, and why is this so important?
That is the $1,000,000 question. Not to knock heads with you, I don't know that any market is a bad market, but it comes down to compatibility, and that means harmony, which I think is the expression that Sakota used. Harmony is, two independent entities acting in concert. So systems are systems, and system being Amazon is a system, Apple is a system, Michael Martin is a system. So is Mark Soberman a system. And, Apple, sounds like a cliche, but Apple doesn't ever really know that you own it. Neither does the, Euro Yen cross know that you're long or short the spread. And if it did, it wouldn't care. So your goal is to modulate your temperament and work on yourself as a person, concurrent with trying to understand the technicals and the fundamentals of your trading system, and hopefully through lots of self-discovery and lots of reading and knowledge and doing things like today's webinar, those systems converge. Yeah,
I think one thing that I pulled out of the book a little bit is, I thought was interesting is you talk a lot about really having to sort of embrace your emotions when you trade and actually feel the trade. And I think a lot of times we get taught that we should be very robotic with our trading. So, did I either interpret that you really need to embrace the emotions, or is there something to be said for being like an emotionless trader?
Emotionless trader. Let me tell you something. I've sat 2 feet from Bill Dunn, and he is not a guy who is emotionless. Yet he's full systematic trader. Mostly through the blogosphere, you'll read stuff that you can eliminate emotions. Well, human beings are emotions, and you'll never eliminate emotions at all. I've been both. Right now, I'm a full discretionary trader. Obviously, I use computers to help me calculate where my risk is. But in terms of coming up with trade selection, I use a whole host of stuff, which I can get into, later, as it's not really related to this question. And I've been a full systematized trader. And, you are fully emotionally engaged no matter how you're doing it. In fact, if you do have a system and it has positive mathematical expectation and you allow for zero discretion, as soon as you hit F9 and hit run and you have to put your first trades on the floor or execute them yourself electronically, you find out very, very quickly that you are still lit up like a Christmas tree when it comes time to trading, because you have money on the line, you have expectations, you have people who have trusted you with money, and they want results. And so on several levels, you have emotion running through your body. Trading systems, mechanized or not, really just helps you get a lot closer to your emotions quicker. than if you were going to sit and try to wait to do things discretionarily, which typically take a lot more time to do because you don't know anything when you're starting.
Right. I mean, do you think it's important, obviously, to feel the emotions of trading, but are we supposed to be balanced? For instance, should we feel, well, we're not going to exactly feel similar things when we win or lose, but maybe the heightened nature of the emotions, whether you have a winner or a loser, I mean, should we strive for some balance in that?
Well, I think there's two questions there. One is you are feeling your feelings, whether you like it or not. You're feeling feelings. You put a trade on and you make, $200 in a gold trade, or if you can make 50 pips on a forex trade, that might light you up, and so you are going to feel those feelings no matter what. Likewise, if you get stopped, or if you've got the yen, they intervened on the yen, interventions don't work, but they do it anyway for some reason. You are going to be feeling your feelings. What you want to find is that if you have big dips in your feelings and you get depressed or emotionally, wiped out from your trading, either because you're spending 10 hours a day in front of a screen, which I do not do, or you spend 50 hours a week of preparation to put on 2 trades, or whether you just like to sit there and double click your mouse to make 10 pips on a trade, that all feeds your emotional system. So whether you're aware of it or not is irrelevant. You are an emotional person. You are an emotional system. Take the trading out of it, if that helps make it clear. All of our experiences have led us all to be together on the phone today, whether we like it or not. So something resonated with all of us to be here today. And I know it sounds very granola bar, but that is how the world works. Now, emotionally, it's satisfying to give back to the community. It feels good. Right? I'm helping people, most of whom are strangers to me. Hopefully they got something out of the book. Maybe they didn't get anything out of the book. I cannot deny anyone their experience from the book, good or bad. I wrote the book I wanted to write. It was very hard to write without getting way too zen and whatever, and there were plenty of books out there that do a better job of being zen. So I would say if you're feeling strong spikes or lows in your trading, that's where your journal comes in. You have to write that down because people tend to, myself included, we tend to wash things out or, soften them over time. Yeah, it wasn't really that bad, and that's a truism. When things are great, they're not as great as they seem, and when things are down, they're really not as bad as they are or they seem to be at the time. But I find that a short list is better than a long memory, and I keep a journal. In fact, I've got five of them for various reasons within eyesight, right here. Everything from preparing for today, notes that I took through your questionnaires. I write everything down just because it's good to reflect when I'm a little bit more meditative and see, okay, well, what can I do with this? What kind of resources can I build? Or, wow, why did I feel a certain way when something came up? How did I set myself up for that? And so I think that, does that better answer the question?
Yeah, I mean, it does. I mean, I think, like, for instance, one of the mantras that we have at NetPicks is, get in, get out, get done. You mentioned how, you certainly do not spend 10 hours a day in front of the screen, and we try to teach a concept called power of quitting, and people hate the word quitting because it seems so negative.
Right.
We try to embrace the word quitting and say it's actually a power. And I know one of the things in your book that I remember hearing a lot is the importance and the principle of really keeping your losses small. I would say almost that's one of the mantras that I kind of took out of the book, and I think academically most traders and people probably listening, I think that everybody would agree, yeah, that's a worthy theory. But I know when we try to teach people get in, get out, get done, power of quitting, they can't stop. So it's the same thing. How do you really get people to embrace, why it's so important to keep your losses small and not sabotage yourself when you let those? I think you say somewhere how every big loss was originally a small loss or something like that. I'm sure I've misquoted you, but something to that effect.
Right. I say something in the book that, it's very difficult in America because we're taught to be capitalists from day one, which, I'm a savage capitalist. And that, winners never quit, quitters never win. But my take is that if you can, like you say, get in, get out, and get done or get down, just chill, take a day off, put some time between yourself and the trading because you will have more equity in your account. I can't tell you how many guys that I know call me back and say, I feel humiliated to have to tell you you're a great guy, but my equity is down 90%, and I've done nothing but spend the last month revenge trading against the crude oil market. And, it's really sad, but people want to take it out and try to bully the market, and the sooner you can surrender to the fact that you are the small banana in the crowd when it comes to any market that you're trading, whether it's Amazon, GE, foreign exchange, interbank, foreign currency futures, it all comes back to your emotions. Now, you can trade interbank and lever yourself 200 to 1 if you want and find a way to do that. You can trade currency futures. You can trade the minis. I know guys that don't want to trade the minis, though, because it's emasculating. Now, that to me is completely retarded. I don't know why anyone would think that because, again, they're not trading for the gains. They're trading for ego and bravado and to pump their chest maybe. But that to me isn't trading. That is, to me, is being immature and childish. As far as getting in, getting out, and getting done, you have to keep your losses small. What I tried to do in the book is actually break down the trades, because that's a truism, and obviously there's been 1,000 people who have said keep your losses small. But saying it and not conjugating it to your emotions doesn't do anything for anybody. So in the book, I try to say keep your losses small, and this is how you do it. And oh, by the way, this is the important part. This is what you're going to be feeling when you have to keep your losses small. So, for example, if I say, get in, is it get in and get out and then get done?
Right.
Right. So when you get done, your listeners and your students have to be patient. So the question I write in the book and something that we can talk about today is, what do you feel like when you have to be patient? What is that like for you? Teach me and tell me what it's like when you have to be patient, because patience is not a feeling. Patience is really a state of mind. It's a place of being, maybe sitting still, sitting on your hands. I know someone listening right now would find that it would be absolutely heretical if I said, log out of your trading system today and turn the screen off. Don't watch the markets in real time. They'd be like, well, that's not what traders do. And I'd say, well, that's what your definition of trading is that you see yourself in front of a screen all day watching the markets. That to me is entertainment. It's not trading. But if it works for you, great. Who am I to say? I say take out your journal and write down, if you can, if you're man enough, to write down what you're feeling when you have to surrender. Does that really mean quitting, or does it mean regroup and come back tomorrow with a clear head so that you can go out? Paul Tudor Jones used to have records and records of data whereby he would keep track of his daily equity run, something we can get into later for those of the listeners who are looking to get allocations. And he would have rules and say, well, he never wanted to have a month where he was down more than 10%. So when he was down 8% or whatever, he'd be cutting his positions and getting done, as you would say, and being in cash. Now, even if he had a week to go in the month, he would take the rest of the month off, because on his track record, he never wanted to have a 10% or a 1,000 plus basis point down month on his P&L. He used to do it for weeks too. He didn't want to have like a 2% week, or a 2% day, and then other rules for the weeks. I have to look up the numbers, but I know he had them, and that's how you have very, very rigorous risk management. Now, at the end of the day, the allocators are going to want to see how you performed under pressure when you were down, how long the drawdown was, and what your daily vol is. So you do yourself a big favor by actually taking time out and putting some distance between yourself and then feeling whatever those feelings are. Because if you think you're going to bull your way through it, you're not going to rationalize your way through a drawdown. That's suicide. And that's my 2 cents on it.
Sure. Well, it's interesting because we have a strategy that we call Keltner bells, and it's all about swing trading Forex. And we all know that Forex is basically open 24 hours a day, and any of us who have tried to trade Forex, for 24 hours know that that's leading nowhere good, obviously, quickly. So we teach something called Snapshot Trading, which is basically taking a snapshot of the market 2 times in 24 hours and letting the rest just sort of do what it needs to do. And it drives people absolutely crazy who have this strategy from us, because they can't stand to be on the sidelines. They can't stand to potentially miss a trade at 2 in the morning or 2 in the afternoon. And I think it's a lot to do with, you mentioned a lot about like just sort of natural human nature, and how smart people, they just they hate being wrong. We're all taught a certain way in school, and when you trade, you really have to just realize that being wrong is going to be something that's going to happen on a regular basis. You are going to miss good trades all the time. By being patient, like you say, waiting for those odds to really be stacked enough in your favor. I mean, how do we kind of get around, I guess, the way that we're coded as human beings to actually be able to, adapt to a strategy that's telling us to do the exact opposite of what's comfortable for us?
Well, that's the get in part, right? I mean, Jason Zweig wrote in Your Money in Your Brain, and Joan Allaire probably wrote one of the best books I've ever read in my life, How We Decide, talk about the prefrontal cortex and how as human beings over millions of years, we have been conditioned to respond to opportunity, whether it's at the casino, whether it's with a loved one, significant other, whether it's trading. And that's the get in part. And I think a lot's been written about, missing opportunities in trading. It's not that big of a deal. Yeah, sure. If gold is going to go from 400 to 3 grand, there's probably a couple spots that you can get long. So any one trade is really incidental to your career. Two, if you're so inclined, unless of course you like beating your head against the wall and thinking that you actually have skills that you don't currently have, but for some reason you should be aware at 2 o'clock in the morning if there's a big move in a currency, you probably have expectations of yourself that far exceed what anyone else would expect from you. Two, you can program something to look for those types of opportunities where you don't even have to be there with an algorithm or some type of high-frequency trading solution, so that this way you don't actually miss the trade. You don't have to be awake for it either. So you can look at, in your journal again, what does it feel like when you feel like you miss an opportunity, and what does that really mean to you? What could you have done differently? Because the goal is to have balance and harmony, not just between yourself and your trading, but in the rest of your life. If you kind of pull the Jack Nicholson, you'll have all work and no play make Jack a dull boy, and you're in a scene from The Shining. And so you have to have balance in your life so that everything works for you, not just your trading mechanism, but what you're looking to get out of it emotionally, right? Trading has to be both emotionally rewarding as well as financially rewarding. And whatever feeling you keep feeling from your trading is part of your system. So if you feel frustrated because you're missing opportunities all the time, well, that's really your system. And so if you keep doing it, I don't really see anything wrong with that system. It's a system to deliver you frustration. It's working perfectly. Don't change it. But if you want to give yourself a break and trade during normal hours, then, focus on, the 9:30 to 4 p.m. racket, or whatever time frame you're going to delineate for yourself, and say, okay, here are the hours I'm going to trade. If it's going to happen, it has to happen within these hours, and then I'm going to turn off the machine. There's a point where you have to turn it off and go do something else. Go read, go for a hike, go outside, go to the gym, go surfing, whatever it is that you do, go do it. Because everyone in the book has something. Everybody in the book that I spoke with has a way to get away from the market. They do not obsess. Obsession is not a good thing.
Right. I think you have, I know there's a chapter, I think you call it Surrender, and I think one of the quotes you have, the famous quote from the great trader Yoda was, train yourself to let go of everything you fear to lose. And you talk a little bit about, how people try to avoid failure at all costs. And, obviously we're talking about, minimizing the time in the markets, but, even if you're able to do that, you're still going to have, failure on a regular basis. I mean, we're talking about embracing those feelings, and but, how does somebody kind of, I don't kind of get through that if they're hitting like a losing streak or having a number of losers in a row? They're doing everything right, they're following their plan, but they're still failing. What can somebody do to kind of keep
right? So
on?
Imagine yourself sitting in a chair, and now separate your body and go stand 10 feet away. Look back at yourself sitting in the chair. What is so bad about trying something and losing? Like, who are you trying to impress? Your dad, your girlfriend, your boyfriend? I don't know who's listening, but what makes them so important to you, and what makes them so infallible? When you talk to most folks, you find out that they have a couple of real doozies in their life where they completely not only dropped the ball, they were ignorant to the opportunities, they made fantastic errors in judgment. And even if you don't believe any of that, you can read anything from Nassim Taleb, who tells us that human beings are definitely addicted to opportunity, but we're also fantastically horrible, channeling a little Phil Tetlock here, of making predictions. We're horrible at knowing both the frequency and the magnitude of any particular type of event. And so why people put that kind of pressure on themselves that they have to be both omniscient but have perfect timing in everything is really an exercise in self-hatred. I don't know what else to call it, but I give myself a bit of a break. I know I'm prepared. I try my hardest. When I fail, I say, okay, what can I learn from this? Both, again, emotionally. Financially, I don't care anymore because I know what my losses are before I start. And, if you're a professional trader, losses are part of the business, My system is not exactly accurate, which means it's based on mathematical expectation. And to tell you a personal story, I launched my own CTA concurrent with joining being invited to join the Incline Village Trading Tribe, which at the time was about 4 or 5 guys, including Ed. So 2 months into it, in my own account where I tend to do my more aggressive trading, I was down 25%. 2 months into it, Ed Sakota sitting immediately to my left in his living room in Incline Village. I remember saying to myself and to Ed, like, wow, this whole trading tribe racket ain't working out so well, Eddie. What the hell's going on? I'm here. I'm flying from Los Angeles. I take 24 hours to, leave LA, get to Incline, and then leave the next morning because it's too late to leave. And yet I find myself down 25%. I get in beans, I get knocked out. I get in the beans, I get knocked out. I get in the beans, I get knocked out. And it didn't feel so well. And it wasn't necessarily humiliating, but Ed's a guy who can look at you and tell you a lot more about yourself without even you uttering a single word. Mike Marcus, same thing. Just very insightful people. So I've been there. I lived through the frustration. I've had the self-doubts, but you have to keep taking that next step. Whether it's a big step, a small step, you have to take the step and say, okay, this is how it goes. Everybody has fantastic drawdowns. Bill Dunn had 3 years, 15% in a row, and he runs money for, gigantic people who have 9-figure accounts with him. Why people feel that they shouldn't have to go through that as traders is not really realistic. And it's probably some idealized version of what a trader should be, of what Bruce Kovner, should be, or Phil Lipschitz, if for those of you who look up to him in the currency trading space. Everyone goes through this emotional hazing, and no one's exempt at any time of their career. So the quote from Yoda is like, what is it that you're holding on to? Is it that you want to be viewed by your peers as a market wizard, or that you're infallible in the markets, or that you're the Zen master? I don't know what that is, but I would just trade to have fun. Have fun, make money, have a great quality of life. Go enjoy, the people that you love in your life and the things that you love to do. That's what trading does for you. Anything else is really a different type of system. It's not really a trading system. It's emotionally, it's an emotional delivery system.
Right. Well, I think a lot of people they buy into the get-rich-quick mentality. They don't realize that there's obviously a lot more to it. It sounds appealing on the surface, and we all kind of gravitate towards that. But I noticed a few times you mentioned in the book, you talked a bit about outliers from Malcolm Gladwell, and I know we've had presentations before talking about the 10,000 hours, needing to master something. And you mentioned, the trading tribe, and you've definitely been somebody, I think, who's surrounded yourself with some great mentors. So I guess my question to you is, I don't know if I'm asking you, do I think if there's a shortcut to the 10,000 hours, but do you think by working with quality mentors, quality coaches, that the 10,000 hours you have to spend can be very different between different people, or is there a shortcut to eliminate that if you're around the right kind of people?
I don't know the answer to that. I've seen people who are terribly gifted, they just get it. But that's a very, very, very small amount of people. To be completely vulnerable with all of you, I was always hyper vigilant, and I always had the internal game. I've played, chess and checkers and poker since I was 7 years old. I'm a musician as well, so I understand the math very well. I'm not afraid of numbers. And I have phenomenal intuition, which I rely on and which is part of my system, contrary to some of the garbage you see on the internet. As far as it relates to, I think having great mentors like I do, or friends, for example, helps me feel more abundance. And I want to share that abundance a la Napoleon Hill kind of a deal. It's only valuable to me to an extent that I can give it away. So I will say that having the great mentors and the friends and the trading partners now, yeah, this is who I evolved to be. I was kind of powerless over that because I followed my path, and these are where I am right now is where I ended up. I was on some level powerless over that, although I had strong intentions. There was probably a good chunk of God-given ability that I was born with, or the personality makeup. For example, and I've said this a few times publicly, if I wasn't a trader who could understand various types of risk and extreme types of leverage or not, I definitely have the personality to be a 9/11 operator or an emergency room surgeon. I don't spook. Doesn't mean I'm better than anybody. It's just my temperament. I'm cool under pressure. I can stay focused and I can stay in the moment and do what needs to get done. That doesn't mean I don't make mistakes. It just means that I'm very present in everything that I do. How can the folks listening benefit or accelerate the process? I think that's going to be just like everyone's fingerprint. It depends on what their intention is. If it's their intention to kind of start the system because they're cheap, then you get what you pay for. You're kidding yourself. So don't be cheap. And if you're cheap, you might take umbrage to my language, but too bad. At the end of the day, if you journal and the more willing you are to become vulnerable with yourself and be brutally honest with what you do, why you do what you do, that to me is the best way to jumpstart and to hasten the process, to accelerate different stages of your growth. I don't think it's going to be parabolic, and I don't think you're going to grow at a straight 30-degree angle. I think you have to be very, very aware of what you're doing, who you're with, who are the people that you surround yourself with, what kind of role models do you have, and how well are they doing in all areas of their life, not just in their trading.
Well, I noticed one thing that you talk about a lot, or you say is one of the real most important aspects of trading successfully is understanding mathematical expectation. And I know we frequently say it's really critical to know your numbers, know your percentages, to do your back testing, to be confident in your plan, because most people, when they hit those 2, 3, 4 losers in a row, is kind of when they quit on the plan, which is almost always the worst timing. So we're sort of talking a little bit now about the sort of the intellectual side of trading. So why do you feel understanding the numbers and mathematical expectation is just so critical to succeeding at trading?
You know why? Because I think it gives you a pat on the back when you're not going to get it from anybody else. When you win at trading, your parents aren't going to know what it's like to really win trading. My parents were born in the Depression, so they don't understand Wall Street at all. So I was never going to get that validation from them. All they cared about was loving me and that I was happy with stuff, and that was the best I was going to get. So you might find in your life that you're seeking validation or love or support from people who don't really fully understand what you do. So that smile they give you is really a smile because they love and they support you, not necessarily because they understand a damn clue of what you're doing. If you do have a back-tested model that you've used either a spreadsheet for or some simulation software for, the hypotheticals can help you have an emotional grounding, if you will. So that when you do have 2 or 3 trades in a row, if those results in real time, if those actual trading results are within model, then what's the big deal? If you've done the hypotheticals and you've done your Monte Carlo simulations and you know that you're going to have, a 14% drawdown that's going to last 7 months, and you are at a 10% moment in 4 months, yes, it's aggravating, but you expected it. So yes, it sucks. And it's a drag, and you'll dig your way out. But if it's within model, on some level, you're doing exactly as you should be doing. Doesn't mean you have to be happy about it, but if you're frustrated or feeling some strong feelings about it, realize that that is the point of your system. Your system and the instruments you choose to trade, how you trade them, is the point of your emotional system. And that's kind of where my book was coming from, is that if you're trading Forex overnight, 100-to-1 leverage, you might not be trading for the gains. You're trading for the emotions that mechanism gives you. Or, said another way, your emotions are set up in a certain way to attract you to a certain style of trading. So that's why you have to learn about the trading, but you also have to understand yourself. Because you will be attracted to it like you're attracted to a certain type of lover or whatever. If you're into, tall, dark, and handsome, or if you want the red hair, blue eyes, freckle face, Irish thing going, perfect. If you're into blondes, who are 5'8" or better, that's a limit order, right? I mean, that's the way that it works. So you are attracted to those types of people because of the way they make you feel. Well, guess what? You're attracted to a certain type of trading. You're attracted to a certain type of trading for the same reasons. And that's why you need to be hyper aware of all your activity, because they all add up to your emotional system, which is going to try to converge with your trading. What I have learned the hard way, both myself, is that if you take on big positions or you use excessive leverage, you are going to typically get blasted. You know, the fall of mankind can be traced along the lines of who's used excessive leverage or not. So my take is to not use a lot of leverage in what you do. Whether you know, there's certain things you have to use leverage for, right? Foreign exchange and commodity futures, they're in margin accounts, but you don't have to jack it up and use it to levels where one bad move puts you in a very perilous situation. Unless you like taking those types of chances, but I would say go cliff hanging, go, you know, barehanded rock climbing without ropes. That'll give you the same feeling, and your money will be a lot safer. You can leave it to your kids or to your loved ones or what have you, or at least pay for your final expenses when you fall off the cliff.
One of the things you say in the book, you know, that this reminds me of, you pointed out that we're all naturally pleasure seekers, and we're all, you know, as much as traders, much of trading has to do with seeking that pleasure or that 5A blonde that you're talking about. But then you mentioned that professional traders, I mean, I assume there's some pleasure seeking going on, but they actually, it's more about avoiding pain for them, you know, being one of the difference or the different skills between maybe a pro trader and somebody who's not. I mean, is that one of the big difference makers that you see?
Yeah. I think there's two answers to that, and I'm just going to write it down so I don't forget, because I have a tendency to get way into my deal. So there's two answers to that, and I think this is pretty insightful stuff. A guy like Bill Dunn is addicted to his discipline. So any one particular trade doesn't mean a rat's backside to him per se, because as long as the trade gets entered and exit with the right amount of risk, according to his rules, which go back to, you know, the early rules go back to 71. The ones that he's using today were more formalized in 74. He trades to stay to his discipline. So when every morning he wakes up, the bell goes off, he puts his trades on, and there you go. That's what the payoff for him is emotionally, is to be disciplined. So that should ring a few bells. The other thing is this. Say my system has 40% accuracy and my winners are 6 times the size of my loser. That has positive expectation. So, you know, to do the math on that, you do 0.4 times 6 minus 0.6, meaning the losing percent, times my bet size, 1. And if you do the net number on that, the difference, you'll find out that it has positive expectation. Well, not only will Bill Dunn be addicted to his discipline, the professional traders feel equally satiated by the 40% winners that make 6 times their capital as they do about the 60% losers that lose 1 times their bet size. So they're nonplussed. They are, you know, again, they are not addicted to any one type of income. Do they see certain setups and think, you know, with Ben Bernanke doing this and the fall of Greece and Berlusconi doing that and, you know, whatever? Yeah, sure, they're well-studied people, right? I mean, Victor Sperandio's read almost 2,000 books, and I know because I've seen them. They're in his damn living room. I've seen all the books. It's ridiculous. It was like wallpapers, just the covers of books. It's ridiculous. No one should have that many books in one spot. Talk about hoarding, for the love of God.
Right.
So that's my 2 cents on it, is that it comes down to running the overall system. Of course, you need to make money to be in business long-term, to get your gains, to get your incentive fees, whatever you're doing it for. But emotionally, that's a big surrender, especially the part where you have to feel the same about losing, you know, 1 times your bet size 60% of the time. I mean, if you don't feel good about that and having the luxury of getting out at only 1 times your bet size 60% of the time, you're missing the point.
Sure. Well, I think you mentioned also in the book that when you're sort of grading your trading students, how when they can finally come to you, right, and say that their best trade of the day was a losing one, you know, in your opinion, that I think is what you said, that you feel that they're finally actually, you know, onto something, that they're trading correctly. And I know that in some of our writing and our blog posts, etc., sometimes we highlight really a trade that broke even or lost money and make it the highlight of the day. And I know there are people probably who read that post or watch that video and think they don't get it. They think that we're crazy to even say that that's a positive. They look at it like, you know, you lost, you're a loser. I mean, show me the winners. But why do you think it's so important to kind of get to that point? I guess it's a little bit what you're saying here with the way that that professional trader feels about the 6 times versus the 1-time loss.
Yeah, well, again, you become emotionally attached to the outcome of something. You probably do that in your life too, because again, it's an emotional system. Your trading is just going to be a little speck of sand on the big beach of your life on how you probably view a lot of things. You might want to go, get a certain car, live in a certain neighborhood, date a certain person, or, get a certain suit, or even have, the Yankees win the World Series. And, I bet if you have expectations of other things or other people, all those feelings are probably very congruent. And so the results that you get from your trading are probably no different than what your expectations might be, from Robbie Cano getting at bat with that beautiful swing of his. I mean, it doesn't really change that much. And I think if the goal for you as a trader, of course, is to have a system that you're compatible with. But I'm presuming that the folks want to do this either to run public money or to have it as a career so they can have a high quality of life. And when you say run public money or have a career, you're talking about many, 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 many years. And the only way you're going to survive many, many, many years is if you're emotionally placated. You can't be lit up like, your Uncle Vinny's EKG after a big, 16-inch meatball parm and 2 liters of Coke. Emotionally, as you watch the ticker tape, it's just not going to work. You're not going to make it. I can say that with a great deal of certainty. If you get lit up from your trading, it's just a matter of time before you exhaust yourself.
Right. Well, you mentioned, I think you did a little bit earlier in the interview as well, that every successful trader that you've talked to, interviewed, etc., has some form of, I think you said, spiritual practice. And I know that we'll have some people in the audience with their arms folded because we use, the word yoga, that'll fold some arms, maybe the wrong way, not in a yoga pose. But, you mentioned a variety of different things. I mean, why is that so important to trading? Why do you think every successful trader has that or possesses that?
Well, again, the traders that I know are very independent people. They have their own way of doing stuff. And they also are alone, right? They make their own decisions. So the feedback mechanism, very, very different than if you work in an office and you're meeting, let's take our 15-minute, union coffee break and go clutch about the garbage that's going on in the office and how much we hate the shop steward or the foreman on the job. When you're a trader, everything that you do is pretty much on your own. You can have a community, you can be, at NetPicks, you can be on StockTwits, you can do a whole host of stuff to get community, but at the end of the day, you are the judge and the jury, you're the pilot and the navigator. And so you got to give yourself a break. And so the thing to write in your journal right now as the light bulbs are going off is when and how do you give your, specifically now, don't just say, well, I go to the movies on Saturday night. No, that doesn't count. Write in your journal right now, unfold your arms and stop being an egomaniac. Write down in your journal how do you have a spiritual life. And if you can't do it, you don't have one, and that's okay. You can get one. But everyone that I know does something. Victor is friggin' world-class chef. Ed Sakota is a great banjo player. Marcus plays golf all the time. So everybody has something that they do that they really focus on that they end up being really good at, which is kind of, interesting, is that they're not just good at trading. They typically have something else that's really amazing skill set. So, give yourself a break. Trading's hard enough. The markets are going to mutate to kill you because that's what they do. Every system's going to work some of the time, and trading is really all about what do you do when your methodology is not working. How do you batten down the hatches and hang in there to the moment in time, or, extended or not, when your system is back in vogue?
Sure. What if I kind of put you on the spot a little bit? Obviously, talking about having this sort of the spiritual outlet. But if people listening, what would you think would be like as they walk away from the interview, like the top 3 takeaways, whether it's the journal, whether it's the inner voice, the spiritual side of it, the dealing with the losses? I mean, what would be your top 3 suggestions to somebody that would contribute the most, hopefully, to kind of going on that path of successful trading?
Right. So, it's easy to do yoga in Southern California because every other place is Starbucks yoga school, Starbucks yoga school. So, yoga is not about bending or being flexible, nor is it for a bunch of men and female dancers. It's about a moving meditation and losing yourself in the acrobatics of it for the most part, and learning to just be present, doing some things that you normally wouldn't be doing outside in front of your clients. If you don't like meditation, or if that seems too Buddhist, because that's not really, meditation is ecumenical. It has nothing to do with religion. Sit in a chair, quiet, close your eyes, and what comes up for you? Simplest form of meditation. What is the prevailing thought? And if you do have things coming up for you all the time, how can you stop your mind from working? How can you quiet it down? Everyone knows or has probably read that if human beings only use 10% of the mind, what's the other 90% going to? Your autonomic nervous system? Not exactly. So figure out, how do you quiet your mind so that you can channel most of your brain power to do the things that serve you better than they currently are? For Mike Bellifiore at SMB, it was, waking up at 5 o'clock and taking a bottle of water and running the big loop at Central Park. Like I said, for Marcus, it's doing golf and just leaving the markets, not taking your PDA. They can call back. There's no text message or BBA or AOL chat or Facebook message that you need to get. You can afford 4 hours to yourself of doing nothing and being unavailable. The world will continue to rotate on its axis if you're not available.
Right.
Listen to music, do whatever. I like to read. I play guitar. I've been playing since 1973. So I have lots of channels. Just do what you like, but make sure that it's for you and that it's you only. If you're going to be bothered or be interrupted, you're still serving somebody else.
Yeah, I mean that definitely makes sense. I mean, obviously you got to certainly personalize it. I think this would probably be a good time to sort of move into a few of the questions that have come in. And I guess if you have been holding on to a question and you want to ask Michael, this would be a good time to do that. So just go ahead and type those in. I'm going to scan through here. There is a question from another Michael, Mike M, and he's talking about that everybody has a drawdown. He's obviously in a drawdown now. He's asking, how do you get through it? My peers think I'm crazy. They tell me to get a real job that this doesn't work. How does a person pay the rent with losing trades?
Yeah, well, I mean, the sad part is you can't pay with losing trades, but you can pay it with persistence. I mean, if you ask your friends who are telling you you're crazy, I would just take a look and see how happy are they in doing what they do. As long as you're happy doing what you do and you believe in yourself, I think persistence and determination mean a lot in this business. And sadly, you're on your own. No one is going to tell you there, to get in the game and to keep moving along more than you can do for yourself. Typically, when you go into a drawdown, technically speaking, you want to trade smaller position size so that you don't dig deeper, because you may be in one of those periods of time when your system is not congruent with what's going on in the market. Doesn't mean it's not going to work long term. It just means that it's not working right now. And that in and of itself doesn't mean it's a bad thing. When's the last time you wore a down parka in the middle of July, right? I mean, that's a system that's not going to work all the time. But right now, if you have one, it's probably a good thing. So, give yourself a break. Remember that Michael Marcus, probably the greatest trader ever, had to borrow, he blew up 3 times. So as long as you haven't blown up, you can say on some level that you have outperformed Mike Marcus on his way to taking 30,000 to, $250 million. So, give yourself a break and don't worry about what your friends say. Worry about what it means to you.
Right. Nobody ever said it was going to be easy. That's for sure.
Yeah, or else everyone would be doing it.
Exactly. Robert says, Michael, I was in a trade this morning, had a risk of 10 ticks in Crude. I moved my stop to 20 ticks and got stopped out. How did you get to the point of not changing your risk? So it sounds like he had a plan. Everything was said. He was going to take a 10-tick risk. He got afraid of losing, I guess, and so he widened the stop, and of course he doubled his stop. So I guess the question there is, how do you get to the point where you can just, avoid the sabotage that, obviously happened for Robert this morning?
Yeah, that's the culturing of the pro, Robert, that you have to go through, and you are your best coach. The way I did it was, I realized that, position sizing and the amount of space, like the 10-tick to the 20-tick space, only works inversely with your position size. So if you're trading the big crude contract, you might consider trading a smaller one to give yourself some more room. I am not the world's best day trader. I'm a tape reader. I totally read what the crowd is doing, and I look at multiple time frames from weeklies, dailies, and intraday stuff. But I typically give myself, I give myself at more than 10 ticks on skid and slippage to get into a trade. Never mind, the distance between my entry and my protective buy or sell stop, depending on whether I'm long or short. So I can't really speak to the significance of your 10 to 20 ticks, but I can speak on, I allow myself to be wrong, and I'd rather be wrong and in cash and be frustrated than to be knocked out at 50 ticks and be despondent, because then I know that I'd let myself down. I can't control where crude's going to go any more than you are, but I tend to like to give myself a lot of room in my trades. As you can imagine with that, because I know the follow-up question is, well, how do you do it then? Well, I trade spreads, right? So I'm hedged. I trade a lot of spreads, Brent, WTI. I trade the product spreads. I trade seasonal, old crop, new crop spreads, and that's just my temperament. And with those types of things, not only are you afforded less margin, which of course you don't want to over-lever, but because of the nature, the fact that you're long and short, you have a lot more breathing room. So if you're right on 3 of the 4 of the 5 ways that the spread could work out for you, things tend to work out financially and emotionally.
Sure, thanks. I do have several questions or people asking if the presentation was recorded or archived, which it has been, so we'll make that available to you. Justin C. says, brilliant stuff, 1 book sold and will be recommended to many. Will it be archived? So thanks, Justin, for that, and the answer to that is definitely yes. So Michael says thanks. Barry's asking, what is the key to having confidence in your trading?
What is the key to having confidence in your trading? For me, it came with the bona fide persistence and determination to my craft, to learn about trading and to learn about myself. Once you put in the time, no one can take it away from you. And I knew what my intention was, that I wanted to be a world-class trader, and operate in that field. And, who knows if I'm there, but I'm certainly on that trajectory. So I think if you have written goals and what you want, how do you want your trading to serve you, right? As more of that can be visualized and be realized, I think you will gain, not that you don't have confidence now, but your confidence and your self-esteem of who you are as a trader will grow. That's how it happened for me.
I appreciate that. Question here, well, several people. Obviously, I know you can get the book on Amazon, and Michael, a couple questions. Can you get it in bookstores, or is it, how are the chains carrying it?
Yeah, funny, it's very weird to walk through a bookstore and see your book.
It's got to be.
Being the first-time author. So yes, it is. I've seen it in the bookstores. It's available Amazon and Barnes & Noble and Apple, and it's also available in bookstores.
Cool. Have a question here. This is probably from Marvin. He's in his 9th year of trading, still in the red. Most guys are professionals by now. Obviously, he's seen people turn successful. I'm not sure it's a tough one to answer. So what am I doing wrong, and what advice can you give? That's a pretty loaded question, but I don't know if you have any take on that.
Well, first of all, 9 years of dedication is something that most people don't have. So, I would say you're probably a lot closer to succeeding and turning it into the black. Unless of course you have some fatal flaws. What are those fatal flaws? Well, picking stops and then changing them to bigger losses than you can sustain, and putting yourself and your account into a point where it's hard to come back. So if you get down 20% or more, very difficult to come back from that. Prudent trading would suggest that when you go into those types of drawdowns, that you have to cut your position size and cut your risk exposure so that you can have, you don't blow up. You cut what we call your risk of total ruin. The other thing, I'm going to take a wicked guess, is that over 9 years you've probably traded 45 different trading systems. And as Ed Sakota taught me, and everybody else, the word is apostasy. Apostasy generally fails. So Monday you can't be a staunch Catholic, Tuesday a devout Jew, Thursday or Wednesday an agnostic, and then a Muslim on Thursday. It just would make you berserk. And of course, I'm not saying anything pro or con about any religion. I'm just saying that as ideologies go, you typically have to find one that works for you and then stick with it. So persisting but using 45 different trading systems is not going to work. But persisting and being determined to succeed, finding a methodology that works for you and your emotional constitution is likely to get you good results because you've put the time in and you deserve it.
Yeah, we find that a lot with people that we talk to. They kind of do this trading dance is what we call it, and they just literally just move from one to the next. And I'm sure, I have a feeling with Marvin that may be the case. Most people definitely do that. If it's not working for a couple days, they jump into the next thing that was hot yesterday. And sure enough, what happens is you pick it on the cold day, and then you continue that, that dance and that pursuit.
And that's where the lack of self-knowledge is really going to betray you. I mean, that's probably the best example of where the lack of self-knowledge is going to augur into your future and pretty much put you out of the business. Because at that point, again, if every system works some of the time, along the lines of the broken clock is right twice a day model, you should be making enough money on those moments to have some sense of tweaking the thing to make it your own. But, to change from system to system and system, it's not about the system, it's about you.
Yeah, that's definitely true. TJ mentions here, he goes, what exercises or steps would you recommend to not be influenced at the front line of the trade, the moment of truth where you got to pull the trigger, by the emotions that go counter to what the actual trade system says you have to do? I mean, I guess it could be, CNBC blaring in the background telling you one thing or news coming across and your system says go short and it just seems like so counter, but that's, you're trying to follow that system. I mean, how do you combat that at the moment of, the moment of truth, so to speak?
Right. So, charts and time and sales and reading the tape really just reflect the fundamentals. Now, most traders who are starting learn the technical side because it's easier. It's very hard to learn and study the technicals or the fundamentals, of like the cocoa market. It's a very rigorous amount of study. So most folks tend to not want to focus on the fundamentals because you actually have to know something. You can learn some basic chart patterns and risk temperament and stuff very, very quickly and kind of get up in the game. But I liken that to being 16 years old and getting your driver's permit. That kind of gets you in the game, it gets you behind the wheel, but sooner or later you actually have to learn about the instruments that you're trading. And if you don't, you're at a distinct disadvantage. And anyone that tells you otherwise is basically full of it or trying to sell you something. I don't have TV. It'll be 5 years this March that I don't have a cable TV subscription. I watch the Yankees on MLB.TV, and if I see any videos, it's usually because someone's embedded it on a blog or sent me a link to YouTube to see the video. And so I think that why do I do it that way? It's because I don't trust anybody. Well, who am I going to trust on TV about my risk management system? What do they know about me? And, the analysts will make predictions. Again, if you go read Phil Tetlock on prediction, the better the analyst or the more well-known the analyst, the worse their predictions tend to be, which is really bizarre. So that actually means the more popular people are doing the worst damage. Right. The other thing they don't tell you is, what do you do when you're wrong? All right, so, Kramer had the 4 horsemen. How are they doing now? Well, I'll tell you what they're doing. They're sitting in my toilet with Mr. Tidy Ball with the rowboat out there, right, and making it happen Froggy style. So, where do you go if you're wrong? And that's where you have to be true to your own emotional constitution. I don't know if you can block out your feelings. The safest thing to do would be to stop trading until you can figure out why at the moment of inception you get psyched out or whatever's happening for you. You have strong feelings that you have self-doubt, you doubt the system, or that you put a lot of credence into what, I don't know who the folks are on TV are anymore, but why are they, they're just conduits, they're journalists, they're not traders. They are journalists who have a lot of financial speak down, but I don't know that they know anything about risk management. And that's what we are as traders. We are risk managers.
Right. I mean, it's almost, you put on that trade and it's sort of like, letting yourself, and forgiving yourself if the trade's a loser, is perfectly fine. I mean, not worrying about or not having that fear of loss. I mean, I think that's really critical.
They have no skin in the game. They're there
Yeah.
to entertain you, right? I mean,
Sure.
in all due respect to them, and I'm sure it's going to help promote the book, so I'm kind of talking out of both sides of my mouth. But since you ask a direct question, you know, CNBC, Bloomberg, they're great people. They're very, very bright, but don't lose sight of the fact that it's infotainment.
Yeah.
You know, I don't know that you've made the assumption that they're there to help you make money. I don't make that assumption. I make it that they are a very, very powerful network, and they have access to people that I couldn't get on my own. And every once in a while, they may have an interview with somebody that I find insightful. But that's good. That's becoming harder and harder to do if you have any type of access to Twitter. You can get really, really great stuff through Twitter anymore a lot quicker. So I don't have any illusion that my friends, and I know everybody on Fast Money, I know a lot of the producers behind the scenes, I just know them for what they are. And that's true of Fox Business News, Bloomberg, and CNBC. So the other thing that comes to mind right now is you might be seeking validation. Like, is it okay? Do I have your permission to put this trade on? And what is the emotional follow-through of putting it on? Am I going to get the feedback from StockTwits or wherever else I'm looking for on an external aspect? It's a truism to say that, you know, there aren't any external solutions to your internal woes. If you either have confidence or you don't. And the only other thing I can do is to say trade small. Or use options, you know, put on a position that you know you can withstand emotionally and financially. And then, you know, keep a record of it. See how it makes you feel. What were the inputs that you used? What kind of follow-through did you see in the marketplace? And what actions did you take? You know, that's how you can basically design your own system. Just keep extensive notes about what's going on. Then after 2 months, you'll be able to go back and read the stuff, and you'll start to see tendencies. It's brilliant. And it's cheap. All you need is to go buy 2 moleskin books. They cost you $20. So
exactly. Yeah, we always tell people to turn off all of the, you know, outside influences when you're trading. I think it's fine, like you say, for entertainment after the fact to maybe understand why a market possibly went up or down and what the explanations are, which, you know, half the time they're not even really accurate of what caused the move. But people ask me all the time, they know what I trade. They go, hey, Mark, you know, was the market up today? That was a big up day. And I honestly have no clue that the market was up or down because you know, if I'm doing my day trading, it's, to me, I'm not trying to look for the big picture. I'm not trying to listen to what's happening on TV or what's driving it. And I'm sometimes shocked myself that I honestly don't even know if oil was up or down on the day. I know that I shorted twice and bought once, but I truly don't know what the big picture was. And I think people are way too influenced by everything else. And then unfortunately, they psych themselves out, you know, with their system. I have a question here from Bevan. It says, we'll just do one more question here. It says, with goal setting and writing them down, daily review and visualization, are those as important to trading success as the actual system itself? So, you know, going through those other processes that you mentioned.
It's more important because that is the authentic you coming through. I mean, if you sit down and there's nothing more intimate than you taking a piece of paper and a pencil and a pen and writing down what it is you want to do. And if you stick to that, it will manifest in all your actions. You just have to be very, very clear about what you want. And I'll say this too, because it's happened to me both in trading and in my personal relationships. Make sure you're clear about what you don't want. You know what I'm saying?
Right.
For example, you might say, well, I want to trade, and I'm only trading with my own capital. It's risk capital. It's 20% of my overall liquidity. And I'm trading that money to have 100% rate of return or more every year. That's perfect. What you don't know when you try to trade for those types of gains, if you haven't done it before, is that you are likely to have somewhere between a 30 to 60% drawdown or so. And so you might want to consider what kind of drawdown tolerance you have on your trip, on your voyage, your emotional and financial voyage to getting, you know, 100% plus rate of return. And so get clear about what you want, what you don't want, what you're willing to do, and what you're not willing to do. And don't be afraid to draw good boundaries of what you're not willing to do, because sooner or later you're going to get tied up into stuff that you find like, wow, this is just not worth it. But if you had given yourself, you know, 15 minutes to reflect on that stuff before you got started, you might have avoided yourself a lot of duress or agita, as they say in New York, as you go about your business.
Right. Yeah, exactly. Let's see. Marla says, thank you. You've encouraged me. Anna says, thank you. Brilliant session. Stephen has a good comment here. Stephen B. goes, I never get down on myself for a loss. It is the market that is stupid and does not realize that I was right. So that's pretty funny.
That's right.
Yeah. Exactly. All right, well, great, Michael. I think we went a little bit over here, but we really appreciate you taking the time and really enjoyed the interview. Like I said, the book, personally, I definitely give it my highest recommendation. I really enjoyed reading it, related to a lot of what was said, so hopefully people will take a look at that. But we definitely appreciate you taking the time out today and joining the NetPicks audience in this interview. There's Martin's website as well, in case you want to sort of learn more about and read more about Michael. He's got his blog listed there. And then I do want to mention that we have another one of these author interview series coming up on December 13th. And you can see the author and the book that we'll be discussing at that time. So if you want to sign up for that webinar, by all means, we'd be happy to have you join us for that. And then I'll put our final contact information on in a second. But any closing comments or thoughts, Michael, before we let you kind of get on with your day here?
Well, first of all, they were really, really great questions and insights that the folks had. And to be completely honest, any of those questions are things that I think about still to this day. So, we're really not that different. And that doesn't, if you think about it from the standpoint that we're all emotional beings, we're all feeling a lot of similar things. We all want to do well. We all want peace of mind. We all want a high quality of life. And so the questions that the newer folks come through, came up with, men or women, the old timers are still feeling those same feelings right now. They've just found a way to deal with them consistently.
Yeah, I would definitely agree with that. All right, Michael. Well, thanks a lot. We appreciate it, and we'll hopefully talk to you again soon. And good luck with the book, and certainly in your trading as well. Take care.
Thank you for having me. It was a good time.
Thanks, Mike.